YouTube video, and as you can see there, super controversial subject, why day trading just simply doesn't work. Now, before I get into this for the next 5 minutes, I just want to quickly touch on a stat that was provided to us by Forbes magazine, and as you can see there, beautiful picture of Mr. Buffett, absolute legend, bit outdated, but legend nonetheless. But Forbes magazine published a study that showed us that 90% of traders fail. What that simply means is you put money into the stock market and you lose your money, which is never good. Now, part of the problem that we have with this is the image that's presented to us on social media. Now, I'm talking about all those day trading gurus, I'm talking about all those penny stock gurus who have the pictures of the rented mansions, the rented Ferraris, in order to really just show you that this is a lifestyle that you can one day achieve. Now, the problem I have with this approach is, why doesn't everybody that adopts the same approach as all these gurus have that lifestyle too? Why is it that there are only certain individuals who have been mentoring and trading for 10 years have only created a handful of millionaires? That would be the question that I throw out to all these gurus, because I understand that once you start to go down the route of all these penny stocks and all these day trading gurus, that Ferrari will not look like that Ferrari. That Ferrari will look like that Ferrari. And that is essentially what day trading does. It just brings a lot of inconsistency, it brings a lot of danger, and it's not a game that we want to be participating in. Einstein said it best: everything should be made as simple as possible, but not simpler. And when we look at a stock chart such as Nvidia, and we understand that this has had a 650% move in the last 2 years, the day trading mindset is to jump in at $40 here and then take that to $44. And you might be saying to yourself, oh, I've made 10% profit, I really need to exit because price has reached the highest point it's ever reached. And I think once you have the understanding that stocks will always run a lot further than you think is possible, I think once you understand that and you start to move away from the short-term approach, that's where you'll start to see the consistency, and that's where you'll start to see the growth. Now, one of the reasons I've highlighted this stock is because I know an individual that entered here at $40, ran this all the way up to $280 with a $17,000 account, and he turned that $17,000 into $2.1 million. Now, you cannot get to $2.1 million from a $17,000 account by moving in and out of this stock every few dollars. Once you have a winning position, what everybody should be looking to do is to take advantage of that trend. Now, this is a trend following approach, this is a trend trading approach, and this is the approach that has stood the test of time, going way back to the likes of Jesse Livermore, who is recognized to be one of the greatest traders of all time. Even up until the present day, trend following is just a system that works. Once you understand that if you do it any other way, if you're trying to move in every $2, trying to pick the tops and bottoms of price, you're playing on Sesame Street. It's an amateur approach. And if you take it a step further and you're trying to time the market, if your chart looks anything like that, where you're trying to move in on a minute chart, a 15-minute chart, you will get absolutely swallowed whole by Wall Street. It's not an approach that anybody finds any consistency with, and this is the reason why that statistic from Forbes magazine is so high. Everybody gives up because we're presented an image that just tells us that this is the way trading should be, but the reality is the consistency actually applies to another approach, and this is where I have found my consistency, and that's in the trend following approach. If you're seduced by trading setups that look remotely like that, if you're in this business of a get-rich-quick scheme and you believe that moving in and out of a stock every couple of dollars will get you rich, most of the time it will not. You will end up losing all your money. You will blow account after account. You'll keep trying to learn this holy grail of day trading that just does not exist. And ultimately, what's going to happen is you're going to get made to look like a joker by Wall Street. Now, this is the approach that I have. I have an emphasis on optimal entries into the market. And quite simply, I want to run a trend for as long as it's paying me. And if we look at a stock like Twilio there, which has obviously had an incredible trend over the last 12 months, but when you can identify optimal entries, and in this case, we're looking at just above $100, a few weeks later, Twilio has arrived at $136, which is obviously a good 35, 36% move, which is absolutely what we want to be part of. We quite simply will not generate those kind of returns by moving in and out of this stock every 20 minutes. So when you understand that, the decision making becomes easier, the management of the trade becomes easier, and that's where the consistency lies. And I like to think of it as the Batman approach. Now, by having that approach, it does mirror somewhat what happens on Wall Street. So we want to be playing on Wall Street, and as I said before, we don't want to be playing on Sesame Street. Leave Sesame Street for all the amateurs and for all the inconsistent traders. Because when you're playing on Sesame Street, Wall Street is going to swallow you into the biggest black hole you've ever seen. Now, with that, price is what pays. Now, this is another controversial subject. This will annoy quite a lot of you fundamental guys out there that are watching this, but it's not the balance sheet of a company that pays you. And this is a concept that I find a lot of people have difficulty understanding, because it doesn't matter what the balance sheet of a company looks like. If the stock price is going up, why shouldn't we be part of that stock price move to the upside? Yeah, we identify the optimal entry, we manage the trade correctly, and eventually we'll get stopped out and we'll exit our position, but we'll be exited at profit. The balance sheet of the company does not pay us. And it is price that pays. And this is a concept that is lost on absolutely everybody. It still makes me cringe when I see people, say that companies are overvalued or undervalued. It does not matter. Let me tell you now, it does not matter what the balance sheet of the company looks like, because if the stock price is going up, we will get paid. And that is essentially what we're looking for. We use technical analysis to identify optimal entries into the market, and we use trade management skills to exit our position and extract maximum profit from a trend. That is essentially how to be consistent or generate more consistency in your trading, and how to generate more profits. And if you want to take it a step further, we have an incredible website over at www.honeystocks.com. There's a link down in the description where you can go and have a look. There's an incredible amount of free content, an incredible amount of knowledge in there. And certainly go and check us out. And if you do like this video, give it a thumbs up, please. And if you want to subscribe to our channel, we would be delighted to have you as part of our audience. So if you've stuck around to the end, from the bottom of my heart, thank you very much for watching, and maybe we'll speak soon. Thanks.